we can't have no move like we did with this big candle. So where is that candle at? It paints here in a second. No, where'd it go? Come on. There it is. We just can't have no move like we've had this because you just get stuck. There's nowhere for it to go. If your margin is down, please lower your lot size because I'm hoping the people who've had the most success are the ones who do some manual stuff during Asian, or they keep an amount of off risk money, or they're just really low on their lots and they get their 10, 20, 30% in them.
Yeah, I actually closed, I think the newest position, I closed that one because it was only like down $2. So just to mitigate some of that margin, I just closed it. Then I still got the 2 positions open.
And just so you know, here, I'm going to go to a different pair. If you're ever in trouble, okay, whether it's with me or you're learning kind of this, I'm going to take off all this stuff for a second. Let's say you're trying to, I'm going to use this as an option. I'm going to use no price as an option so I don't mess up. Otherwise, I can't do it. But if you're ever in 3 positions and your account is in jeopardy, okay, I can tell you right now, your instinct is going to be to close this one. The problem is, let's say you're trying to buy and price is going against you. Okay. So we just don't get it. It's going against you. There you go. If you close this position, okay, whatever. I don't have an X. So we're going to break up with this spot right here. This one. Now what you need in order to recover or to even get break even, you have to get all the way up into here to break even now. Okay. If you close this one. Now, on the flip side, if you are in trouble and you close this one, okay, remember, you only need to get to here to break even. And anywhere into here is profit to kind of pays for this loss. Does that make sense?
Yeah.
I know you kind of over leveraged and it's all a learning lesson. We're going through it together. But if you're ever in trouble, I know the hardest one that you ever want to let go of, and I did the same thing early on, is I always wanted to close the closest position. That is the worst decision you can make. Because now when we're going to be up on the day, you're not going to be up on the day because you closed this position that would have paid for this one and this one. Does that make sense?
I think so because I closed the newest one at open. It was only like $2. The
This,
the oldest ones are like, I think like 15 and 20 right now, like
yeah.
negative, I think.
So you're closing the closest one. So remember, this one is the biggest drawdown, right?
Right.
It's the oldest trade, the second oldest, and then the newest, right?
Right.
We're in trouble and you close this one. Now this is no longer there. So now what you have are these 2 positions. To even get to break even, you have to get to here, so wherever this price point is, because you're using flat lot sizes. Now on the flip side, so I'm going to mark this with a magnet or kind of really a bigger light bulb. I don't know. I don't have nothing. Sorry.
No, you're good.
That's where you're going to go. So that's how much of a retracement you're going to need now to make any money or to even be, that's not even to make money. That's to break even. You'd have to go to up further to make money. Okay. So cool. We understand that. But if you would left this one open, okay, and for example, closed this one. So now this one's out of the way. We don't have it. You no longer have to get to here. You only have to get to here to break even. So that's a big difference, right? Think about it. Because if that right there, I mean, I know this is not the best instrument to show you on, but that's 16 ticks, okay? Like 160 points or 1,600 or whatever platform you're on.
Oh, I see what you're saying. I get it. Okay, I get it now. Yeah, I get it.
So just something to think about. Never close the soonest position. And I know you think, well, that one's going to give me the most room. It's not. This is the one that's eating the most room. It's taking the most margin anyways. And so just so you know, as we come up into here, your only shot at being net positive or break even or better than break even or net positive is going to be now you've got to get an even bigger move to get to the money.
All right, that makes perfect sense. I'm thinking I'm ahead of the curve, but I screw myself. That's crazy.
No, it's okay. If you're going to stick with it with the long haul, which is what I would tell anybody, again, I use these kinds of things on managed money. I use these kind of things on my personal money No, it is not perfect. Yes, there is risk. Okay. And I'm not saying this over my ego or any other copiers or YouTubes or whatever. I'm saying we all know everybody takes losses. Annual EAs, the professional algorithms, they all take losses. And if you don't believe me, go look at any hedge fund that's in existence. Most of them are down. Okay. Go look at QQQ. Its biggest drawdown was 84%, if I'm not mistaken. It took 175 months to recover that drawdown. I hope you guys do the math. Some of us are not that old. Okay. 175 months to recover their 84% drawdown on QQQ. Okay. And QQQ is one of the top 10, well, top something funds, just so you guys are on the same page. But these things work. It's just most people on our side don't know how to work them. They don't know how to stick with it. They're over leveraging. They're making all the mistakes, and then they fuss and fuss. I promise you, if you stick with it and you kind of work out the kinks that are, especially if you have like a manual EA copier, it's going to have a lot more glitches. You're going to miss too much. Anything digital, like API based, like traders, connectors, those trading tools are obviously going to work much better. 14 years, you crazy? Well, some of us are older than 14, but not by much, right? Not by much. Just a little bit. Little bit. Hold on. QQQ, it's one of the biggest things, right? And this isn't the best way to go look at it, but its biggest drawdown was 84%. It took 14 years to recover. Like 14 years to recover. Do you guys hear that? But this is still one of the tried and true funds of all time. 32% drawdown. It took how much time to recover? That's September 22 all the way just to get back to break even. It took to, of course, a year and a couple months, year and 3-4 months after 32% drawdown. This stuff works when you work it. There's no other way to say that. Now, most people, I'm sad to say, I'm sad for my people. I'm sad for the communities. It's so easy to pick one lane or another. But the truth is, any manual copier in the world, you're going to have losing periods. Like, it doesn't matter. Any EA copier in the world, you're going to have losing periods. But you're still better off probably with an algorithmic one. If you can digest the risk, an algorithmic one, you're almost guaranteed to have an equity curve that looks like this if you can mitigate the parts that are you and mitigate the parts that are your risk. You're almost guaranteed to have an equity curve that looks just like this using something like the US 30 copier. And actually, we make more percentage in a year than this does. We will make more percentage. And I'm talking safely, like won't blow safely. This will be your equity curve. And I don't know about any of you, but I don't have any other way to turn $27 into $500. Okay. And imagine if you have lots of 27s. Okay. If you have lots of 27s, it's going to turn to lots of 500s. Okay. Lots and lots. But our percentage of growth per year is better than this. Our drawdown shouldn't reach that. Okay. 84%. Is this 84%? But when you look at it this way, and this is trading view, so take it with a grain of salt. I promise you, what's in your hands, we don't even understand the value. Like, and how do you teach that to the world? How do you approach that? This is still one of the top best growth funds, right? I know that. What is the other one? I can't remember. It's by whatever newish company. And they're nowhere near this. But this is what you have access to right now. Just to sum it up, this is it. The problem is you've got to mitigate risk. You got to check connections. You probably should keep some amount of off-risk capital if you want to do this like an investor. Remember, these guys have billions of dollars under management. Billions, okay? Billions and millions. You have access to better than this if you can mitigate the risk, if you can figure out the pros and the cons and how to finesse certain times. That's it. I'll go on and on and on because, well, I love it. And this is my life. You guys see that? This is what you have in front of you. A 20-year process that will beat the QQQ. It'll definitely beat the S&P, like this at SPY, right? It'll beat that without a doubt. Like, you got that, no problem. You'll beat that times 10. And by the way, this is not exempt from those, hey, we had drawdown. That's 50%. I think the books read this as, hey, the biggest drawdown S&P's ever had is like 50 some odd percent. Doesn't mean this chart is going to show it that way, but
I
50%.
forget who said it. It was somebody, some big investor that I saw like YouTube, a known person or speaker. Anyways, the main thing to be into it is that part of the thing with investing and buying stocks is not really just the company.